plan push. And you know what's interesting? The market is very frenetic. I mean, just a week ago or 2 weeks ago, we were staring into the abyss of a potential recession. Gold was at record highs, which, by the way, we've talked about gold for years as a part of a portfolio. Teams are working to organize the continuation of the meeting, who added that the pair, Trump and Zelensky, are trying to meet about 15 minutes ahead of Pope Francis's funeral. Their encounter came as Trump is dialing up pressure to reach a peace accord. So there's a lot going on here. But as always, I want to hear from you. Give me a call now, 800-321-0710. That's 800-321-0710. All you got to do is call us. I want to hear from you. So we're on all hour, next 2 hours, taking your calls. This is the part of the show that I love the best, open line editions. And we're going to hear from you. If you have any questions, calls, we'd love to talk to you. So for some reason my screen isn't working right, but oh well. Okay, so the market breathed a sigh of relief this week. Also, Jeff Bezos-backed Slate Auto is unveiling a 20,000 electric pickup that some say is targeted straight at Tesla's Elon Musk. Cybertrucks are now selling 10 or 20 grand a truck. People are ripping off their Tesla logos. But there's a lot of price drops. I mean, if you're looking to buy a Tesla and don't mind getting a brick thrown at your window. No, I'm kidding. You know, I have a Tesla. Nobody's throwing a brick at my window or spray painting my car. I think that's a little bit of faux outrage. Did anybody slash my tires last night, Jim? No. Yeah, so I don't think people, if anything, I'm looking at buying a Tesla. That we'll be looking a year or two from now after the tariffs and go, man, cars are 100 grand. I wish I bought a car last year when I think I'm going to buy one, Jim, just because of the tariff thing. So we'll see how that goes. Tesla shares have actually gone up this week amid bad earnings because Elon looks to be coming back. So give us a call now, 800-321-0710. Now, Toyota is pushing to buy a massive parts supplier. This is huge, $42 billion parts supplier. And this may be to protect itself from the tariffs. Toyota's insistence on a multi-pathway strategy has paid off. This is from, the source is Eric Sherman. So maybe it's to help them amidst the tariffs. So in the U.S., this is pretty crazy. The RAV4 is the only vehicle from any segment to outsell the perennially popular Ford F-150. I don't really want a Ford. Yeah, the RAV4. The RAV4 is a great car. I always thought Ford stood for found on the road dead. When I was a kid, right? The Chevy truck people. I don't think it's a bad brand. And I love that it's American-made, Detroit company. But I don't know. I think the American-made cars, other than my Tesla, they don't last very long. I have a very old Tesla that has lasted years and miles. So give us a call, 800-321-0710, 800-321-0710. If you have questions on stocks, bonds, annuities, mutual funds, whatever question you have, no question is a good one except the one that you do not ask. So the market is breathing a sigh of relief. Why? What are the technical indicators that I'm looking for? The technical indicators that I'm looking for, we closed at 55.25 on the S&P. Monday looked bad. We had a very kind of great start to the market. The market opened below the 5,200 threshold, and the 5,200 threshold is key because that is the new bounds. We have the bad day, April 8th, market was closed at 49.82. The low was 49.10. That is the low. So the next low is higher. That's 51.41. That's this Monday. So when you have higher lows, that tends to be a good sign in the economy. We want to see the market holding. Okay, next up we have Stan the Man. Go ahead. You're on with Josh Jelinski, the financial quarterback. Go ahead, Stan.
Good morning. My question to you is, sir, the middle to lower investor, not the high-end investor, which I know you were involved with, that's your main, but the middle to lower investor in this economy with this administration and this president, do you see them doing well? Because I don't. I used to be in international trade, so I know what's going on with the situation with what he's doing in terms of taxing this country and that taxing that country. But in the middle to lower end, do you see an advantage for in any way for the middle to lower investor?
Well, I think, are you talking about what are the economic objectives of the president to help middle and low? I mean, the objectives is the objective is to get more jobs. If you have more income, then you can save more. That is President Trump's objective. We'll see if it works. We're already seeing certain manufacturing plants move back into the U.S. Toyota, Honda, the chips companies are moving back. Oregon, you have Intel, AMD announcing. You have a lot of these companies. They're announcing, hey, we're bringing factories back. That is the economic objective of the president. In terms of what is someone to do with their money at this time who's kind of a middle-income investor, well, you have a great opportunity right now for middle-income investors. Fixed products are still earning 5%. You could get a 10-year bond yielding 4%. That gives you guarantees from the U.S. government. You could get fixed annuities yielding 5 to 6% right now. In this environment, rates are subject to change at any time because they could go down tomorrow. But that is a great opportunity for somebody. If you have 500 grand, 250 grand, you put something in, you make 5%, your principal stays. That's a good opportunity. Now, as far as what can an average investor do, you could buy index funds, you could buy ETFs. There's been a great democratization of finance through something called the exchange traded fund. That is generally a lower cost mutual fund that trades intraday. You don't have to wait till the end of the day, so you could trade it at 9:02. I'm not 9:02. You could trade it at 9:32 a.m. in the morning. You could trade it at 3:50 in the afternoon. You could buy energy. You could buy defensives. You could buy gold. And we have portfolios for the rich and for the middle investor. So if you want me to help you, and how does the middle investor do it? You diversify, you buy different asset classes, you just don't buy different things. So you might have, we had in our strategic portfolios a 4% weighting to gold. That helped us offset some of the losses on the S&P. We had other indexes. So I hope that helps you. Any other follow-ups to that?
see any recession coming at all?
I do not right now, but we'll see. A couple weeks ago, maybe. No, I don't think I see that anymore. Trump had a pivot. He did the polling, and I think he's pivoting a little bit on the tariff war, on the trade war. I think we're going to probably get 30 trade deals coming in within the next month, and apparently the market agrees this week. But we'll see. I mean, next week, by the way, if we can hold above 5,400 on the S&P this next week, I would not be surprised if we open down Monday, 5,350, 5,450. But if we can hold above that 5,200 threshold on a down day next week and the new floor become 5,500 on the S&P 500, that's the other thing, though. There is a myth that these things are for the wealthy. You can buy a fund. I mean, it's never been a better time to be a middle-class investor. You can buy virtually any asset class you can think of. If you want to buy EV cars, if you want to buy batteries, if you want to buy AI, you can buy all that. The things that wealthier people get to invest in that middle-class people don't is generally private deals, like private equity deals or deals before something goes public, like buying SpaceX or buying Ghost energy drink before it gets bought by Keurig Dr. Pepper. So I hope that helps you. And whether you're got a lot of money or a little, we're here for you. 888-988-JOSH. Give us a call now for your free review. 888-988-JOSH. We'll be back after these messages.
Josh and his team at the
Hey, I
Kavinsky
can't
Advisory
see,
Group
guys,
can help you
the
lower
screen.
your taxes and lower your risk
I have
in
no
these uncertain
visual.
times with a 27-point
I have zero
checklist
visual.
designed to improve your financial health.
My computer
Whether you're
died.
worried about runaway prices, fear of an upcoming recession,
is
or a
absurd
stock
that
market meltdown, tune in to the Financial Quarterback and count on Josh Chalinsky to call the play. For a free copy of Josh's book, The Retirement Reality Check, call 888-988-5674. That's 888-988-5674. Or visit Chalinsky.org. That's JALINSKI.org. Maybe it seems like prices can't get much higher, or that the stock market is headed for bear territory, or maybe you're worried about another great recession. Josh Chalinsky, the Financial Quarterback, can help you protect your family's financial future in times like these. Call 888-988-5674 to take advantage of Josh's 27-point plan to achieve financial health. And when you call, you'll receive a free copy of Josh's book, Retirement Reality Check. Call 888-988-5674 to receive your free copy of Retirement Reality Check.
Okay, we're back. We're back. I'm still muted. We're back. I'm still muted, it says. Okay, it says mute. Okay, we're back. This is Josh Chalinsky, the Financial Quarterback, taking your calls on all matters financial. If you have questions on stocks, bonds, annuities, mutual funds, no question is a dumb one, except the one that you do not ask. So pick up the phone, call me now, 800-321-0710, 800-321-0710. If you have questions on stocks, bonds, annuities, mutual funds, we're here for you now. 800-321-0710. But I want to see the S&P hold above. We had a critical break. It looks like April 8th could be the low. Now, we still have not had the high break above the 5637 threshold since April 2nd. What I would want to see is we have a little drop this week, but the new high becomes the 5,700 mark. I'm talking a little technical analysis. The S&P is the Standard & Poor's 500. That's the biggest 500 stocks. by market-weighted capitalization. Next up, Joan, go ahead.
Hi, Josh. Good morning.
Good morning.
I have a question about Social Security. I wanted to cut my hours back, so I started to collect Social Security about a year before my full retirement age. I've been saving the money that I've been getting from Social Security because I'm afraid I'm going to go over the 23,000 limit for income.
Yep.
So actually, I'm not really missing the money. So I'm wondering, should I save it, give it back to them, save it, invest in maybe a CD with that money, or I do have a small car loan, or just pay off that car loan?
What's the car interest? What's the loan interest rate?
I think it's about 8%.
Yeah, I would have no
I have a
problem.
couple years left.
I would have no problem paying off the car loan. If the CD is 4 or 5% and the car loan's 8, you would make more over time paying off the car debt. Now, if you were to say, hey, should I pay off my car or invest in equities right now? Stocks generally do better as the long-term average than 5, depending on your risk profile. If you need liquid money, I'd say, build your liquid cash dash, build your emergency fund. I have no problem with you paying off the car loans, provided you have sufficient emergency fund and retirement savings. If you're lacking some savings for retirement, I would put money towards your retirement. Are you taking advantage of a Roth IRA or traditional IRA?
I still have a traditional IRA through work.
Are you still putting that money in?
Yes.
Maxing out? Okay.
Yes.
Because that's another thing. You could max out your Roth, even with part-time work. No, there's a lot of options for you. I'd probably favor
Most people regret not waiting till full retirement age, and maybe it's a difference of about $100 a month.
Do most people regret? I don't know if they regret it. I don't think it's about your Social Security strategy. Isn't about most people. It's about what you do. Did you wait or did you take it now?
I took it a year early. I just did not want to put the 40 hours in anymore.
Okay.
I was ready to cut my hours back.
Well, what you could do, did you need to take Social Security to live? To kind of make ends
To
meet?
feel safe, I think.
Okay. Yeah, I mean, there are emotional reasons one would take Social Security early.
Mm-hmm.
There are life expectancy reasons one would want to take Social Security early, like if you think you and your spouse are not going to live very long. Generally, you want to take it later because every year you delay, you get about an 8% growth. And where are you going to get 8% guaranteed? Certainly not the CD.
And that's about the $100 difference.
But that makes a difference over time. That's why financial types say delay. But yeah, I wouldn't regret it if it's what you did. I would just have fun, enjoy your life, and if you can save the difference. Now you might want to save the difference. This is a lot of people when they're retired, they get too conservative and then they lose to inflation. So you might want to have some equities in your portfolio as you age, because very few things can outpace stocks when it comes to its inflation fighting effects. Even though the past year, past few months have been volatile, over the long term, the stock market averages between 7 and 10%, depending on what's starting year. I think the long-term average since 1926 is about 10%. But, I know it's scary for some retirees, so we can certainly help you if you're retiring or nearing retirement with conservative money strategies, which have never been better other than like a year ago. Rates are still high. And the president definitely wants to name a new Fed chair who wants to lower rates. So in a year or two, when that occurs, I think it's just next year, when he names a new Fed chair, he's going to want somebody who's going to slash interest rates. Although I don't think that is the more conservative thing to do, especially in light of inflation. I think you may want to keep rates this high to stave off massive effects of inflation, but we'll see. we certainly know the president's opinion of Powell. This week he came out and said, "Hey, I don't want to fire him." Markets liked that. They didn't want to have a tariff war and then on top of that a Fed chair war. So we have a lot of good things going on in the markets this week. But if rates are going to be lower in the future, I would lock in these high rates at the bank with annuities for longer, because you may look back in a few years and say, I remember we would meet with people in 2013, 2015, and they all said the same thing. Oh man, I wish I locked in a 5% CD for longer than 1 year. And that's what I would recommend people considering. Higher rates we used to do that, high rates in a low yielding universe world. And because people were struggling on a fixed income. Now a retiree can get good rates. So give us a call, 800-321-0710. And any other follow-ups, Joan?
No, but thank you so much.
Thank you. Okay, next up we have Bill.
Hey, Josh.
Hi. Go ahead.
Good morning.
Good morning. Go ahead.
Okay, I wasn't sure. I know there's a delay, and I turned off.
No,
my
we're
radio,
here.
And I'll try to be quick because I know you're busy with time. My question relates to strategizing against the tariffs or future tariff war, and this relates to my
Why can't I?
eventual purchase. Can you hear me?
Yeah, go ahead.
Okay. Eventual purchase of a late model
Does he hear me?
used car. I currently have an older
Why didn't you
used
mute me
car
when he's talking?
that a dealer said that, they would love to give me a better price for it, but they said sell it privately. But I have the fear of having somebody in my car, and with the way crime is in Long Island, I'd be afraid they'd want to rob me of my car. And I'm trying to figure out a way that I could sell it privately, get a better price, to just apply it to the cost of the new car, not to put the money in my pocket, but just to offset the ridiculously high used car prices. And I don't think tariffs even enter into the picture because the car exists right now. It's not new, and it's sitting in a dealer lot. I'm just looking for some advice as to what to do, because somebody advised me go on Facebook, but then again, I'm just dealing with total strangers. And
well, yeah, a lot of people buy cars on eBay or Facebook Marketplace, order a Carfax on the car, get the Kelley Blue Book value, all of those things. You have a lot of options. So, be careful. I mean, if you want to go to a reputable dealer, the risk is they make more money, than doing it privately. A private sale is a better deal because there's a little bit more risk, right? You could go on Facebook Marketplace. That could be a great place to get a deal. There is risks. I would make sure when you're picking up the car, you pick a neutral, safe location, like Dunkin' Donuts. You make sure they give you the title. You make sure you get maybe a legal opinion. Maybe get a lawyer to draft a contract. Check for ID. Get the Carfax on the VIN. All of those things if you want to do a private potential. Does that make sense? Private deal.
But I'd be selling the car privately and purchasing it from a reputable dealer.
Well, what does that mean?
I'm concerned about trying to sell my older vehicle.
Well, you can
to
sell
a
it.
total stranger.
Well, that's the risk. That's why trading in a car, you get taken a little bit. I mean, there's if you put it on Facebook Marketplace, do you go on Facebook at all or no?
Actually, the dealer set it up for me. I was right there, and he said, "Let me." He just showed me all the fields, and he says, "Here's the paragraph where you can do a description and even add photographs."
Yeah. And you're selling your car to somebody. You're not buying the car, so you have less risks if you're selling. Certainly, if you're buying, just make sure they bring, a cashier's check or cash and do the deal.
Right.
I mean, maybe draw up a little contract, get a legal opinion, and you should be fine. But I would do it at a safe central location, all of those things. So
Somebody told me you could go to your police station and do it there.
Yeah.
Because that's a state, either a parking lot or.
yeah, that makes sense. That actually was good bit of advice. Because, I don't think there's going to be any funny business there, right? Yeah, that way there's witnesses if anything happens. So I get that it's risky. You could also do eBay or any of these other, places. Does that help you?
Yes, that'll definitely help me. What was I also doing? Wanted to say earlier you made the comment about the Ford name, Ford. When I grew up as a kid, and that was mentioned as or referred to as fix or repair daily.
Oh, that's funny. So they're all a little differently. I think Ford has done a wonderful job rehabbing their image. So I'm not, bad-mouthing Ford. It was just a funny concept. So we'll take a break, and we'll be back with more of your calls, folks, at 800-321-0710. And, folks, if you're listening and all of this stock market upheaval has got your stomach in knots, call us at 888-988-JOSH for our legendary retirement game plan. That's 45 minutes with our team where you get to meet our team, meet me, over Zoom or in person at our Toms River corporate headquarters. We also have meeting spots in Princeton, Hackensack, Long Island, wherever you are. If you want to meet in person, just call us now, 888-988-JOSH, 888-988-JOSH. Call us, and we'll give you our book, my book, Amazon bestseller, Retirement Reality Check, as a free gift. 888-988-JOSH. We'll be back after these messages.
Maybe it seems like prices can't get much higher.
It says I'm in
or
a
that
meeting.
The stock market is headed for bear territory.
It says I am
or maybe
muted.
You're worried about another great recession.
How
Josh
can
Jelinski,
I
the
unmute
financial
myself?
quarterback, can help you protect your family's financial future in times like
Did-
these.
Can I
Call
now unmute myself? Because I'm going to get something from
888-988-5674 to take
Starbucks.
advantage of Josh's 27-point plan to achieve financial health. And when you call, you'll receive a free copy of Josh's book, Retirement Reality Check. Call 888-988-5674 to receive your free copy of Retirement Reality Check. Josh and his team at the Jelinski Advisory Group can help you lower your taxes and lower your risk in these uncertain times with a 27-point checklist designed to improve your financial health. Whether you're worried about runaway prices, fear of an upcoming recession, or a stock market meltdown, tune in to the Financial Quarterback and count on Josh Jelinski to call the play. For a free copy of Josh's book, The Retirement Reality Check, call 888-988-5674. That's 888-988-5674. Or visit Jelinski.org. That's JALINSKI.org.
We're back. This is Josh Jelinski, the financial quarterback. So, unless the car breaks down and the buyer comes back to you for a refund, so you got some issues. So that's what David said. Next, we have Michael.
Good morning, sir.
Good morning.
How are you? My question's been, I'm a 57-year-old man that I retired from radiology. I was in that for many years. I'm in my second career now. I went into teaching high school. I have a pension from my hospital years. I have a pension from a private practice. I've invested a lot over the years in stock market, things like that. And as we know, the market's not doing great right now, but it'll probably rebound. My question is I've been buying, stacking a lot of gold and silver to the point where I'm actually thinking of taking money out of my some of my funds, my retirement funds, and stacking even more right now. And what's your opinion on that?
You're stacking gold?
And silver, mainly silver stacking. Gold is a little bit harder to stack
To
'cause of the
me,
cost, but
to me, I'm a bigger fan of gold because of its properties since, time immemorium. I think you're buying right now at a high. I think we will probably have a little correction in gold, especially if stocks recover and recession fears subside. That being said, I'm a long-term bull on gold. I don't mind people having a percentage of their portfolio. I've said this, I don't know, since 2010 at least, to add a percentage of, I have no problem with people buying, 4%, 5% in gold and just holding on, especially because, well, what's going to happen, right? Let's say Trump pivots and we have less tariffs, tariff deals, lower interest rates. Well, lower interest rates will probably mean we get inflation a little bit in the future. That'll be good for gold. We were having more austere conditions with Doge and the tariffs. Probably would have been epic for the debt and the national deficit, but people don't like that because they lose their jobs, they get negative public opinion polls, things like that. So, should you continue to stack? How much does gold and silver represent of your overall portfolio?
about a quarter, I would say.
Yeah, I think that's a good percentage. The purpose of gold is money insurance, right?
Right.
It's not so much, you can't eat gold, convert it to cash, or you don't want to. You really want to hold on to it for dear life, hodl it. So if you're going to have to liquidate the gold to buy things short term, I don't look at gold as a short-term prospect. I look at you buying it for 10 years out. Because then you have to pay, do you buy it through an ETF or you're buying the gold coins yourself?
No, privately, estate sales, trying to get it as cheap as possible.
Oh, good, okay.
Same thing with silver.
But you know what I mean? When you buy
big on-
it through a dealer, you're paying 7 to 10% to buy it, 7 to 10% to sell it. One of the nice things for people, regular people who don't have time to go to estate sales, that's a brilliant idea if you know what you're looking for, is there are gold ETFs right now where you can pay a fractional expense ratio, very low costs, and you can actually convert to bullion if you wanted to. There are some funds that actually can be exchanged for the physical gold. But I have no problem with you owning gold for 25% of your portfolio. I don't know if I like it for more than that, to be honest, because you're going to have to live. And that's the same perspective that you should have with real estate or stocks, right? You're holding on for the long term. I'm looking at one ETF right now has an expense ratio of 0.25%. So much less than you buying or selling with the 7 to 10% commission. That's the other thing you got to watch out for with some of these gold salespeople on the radio, no less. So hope that helps you. Any other questions?
Yeah, I mean, the silver, I know you're not too big on silver, but I've been reading a lot.
I'm not bad on
about,
silver. It just doesn't have the same. Silver has a different cycle than gold, right? Silver's
Right.
way harder to time than gold. Gold, you can put your money in,
It's due, though. It's due for.
it is due for a major, uptick. But you got to realize, what takes a lot away from silver now that didn't exist, 20 years ago? Bitcoin. A lot of people who would be gold bugs now are Bitcoiners. And although they are completely different, one is physical and tangible, the other is non-physical, non-tangible. They have similar properties and scarcity and kind of a libertarian view on the world. So I wonder, does the presence of gold, we saw that this week, right? Gold went down, Bitcoin went up. Bitcoin has been a great indicator for where the markets are going to go. So Bitcoin breaking 91,000 this week. I don't know what it is right now. Very bullish sign for the stock market. Another positive. Now this thing could break down. This thing could break down at any moment, okay? This stock market. But, 95,000. That's huge. 95,000 this weekend. So Bitcoin is almost recovered from the swoon of the tariff tantrum. So by my just surface looks of it, Bitcoin is taking away some of the oxygen that gold had. And I think if Bitcoin didn't exist, gold would be like 5,000 right now, but gold, as we saw, yeah, I get Bitcoiners and I like Bitcoin. I speak to a lot of Bitcoiners, I have a lot of Bitcoiner clients. I am a Bitcoiner as it relates to cryptocurrencies, but I never understood why they hated gold so much, and the past months have been a great indication of why I like gold. Bitcoin kind of tracks with the market. Gold did not the last few months. So gold went up as the stock market went down. Showed great physical properties and great non-correlative properties. What that means is you want a portfolio to not go up and down at the same time. So we're always looking as investment advisors, what can be non-correlated with the stock market? What could give you some sleep well at night insurance? Gold had that in this last tizzy. So I hope that helps you. Any other questions, Michael, before we go to the break?
The other thing is I've been reading a lot about Samsung is putting out these new silver batteries that are going to take over the market.
Wow.
That they're going to be able to charge fully in 9 minutes, and basically it's going to go into the silver market so much that they're not going to be able to be competitive as far as mining it. So I'm trying to get on the bandwagon, hoping that's possible. They're saying within like 10 years, silver's going to be so hard to produce what they need. Wow. I don't know if you heard any of this. Or?
Yeah, I've heard that, but I've heard that for 10 years though, and in various properties. I mean, hey, if you've done the research and you like the risk, go for it. I just, I prefer gold over silver as a long-term hedge. But I like silver. I'm not anti-silver. So I would love to meet with you. There was a question that said, did he make a good decision taking money from his annuity to invest in gold and silver? It depends on what tax you're, paying on cashing out the annuity or surrender charges. So my answer there would be, maybe you use money that's already taxed for your purchases. And we're not recommending that you buy or sell anything over the airwaves, Bitcoin, gold, silver, or stocks. You should get personalized investment guidance. Calling us at 888-988-JOSH. We're here for you every day. 888-988-JOSH. 888-988-5674. And if you call us now, you get my book, Retirement Reality Check, as a free gift. We'll be back after these messages.
Maybe it seems like prices can't get much higher, or that the stock market is headed for bear territory, or maybe you're worried about another great recession. Josh Jelinski, the financial quarterback, can help you protect your family's financial future in times like these. Call 888-988-5674 to take advantage of Josh's 27-point plan to achieve financial health. And when you call, you'll receive a free copy of Josh's book, Retirement Reality Check. Call 888-988-5674 to receive your free copy of Retirement Reality Check. Josh and his team at the Jelinski Advisory Group can help you lower your taxes and lower your risk in these uncertain times with a 27-point checklist designed to improve your financial financial health. Whether you're worried about runaway prices, fear of an upcoming recession, or a stock market meltdown, tune in to the Financial Quarterback and count on Josh Jelinski to call the play. For a free copy of Josh's book, The Retirement Reality Check, call 888-988-5674. That's 888-988-5674. Or visit Jelinski.org. That's JALINSKI.org.
This is Josh Jelinski, the Financial Quarterback, and we got Gordon. Go ahead, Gordon.
Yes, Josh, that was a great discussion you had about gold with the previous caller, and it answered most of the question that I had. I know that in the past you've recommended that gold could be, or precious metals perhaps, including gold, could be about 5 to 10% of one's portfolio of investments. And I was wondering if you had changed, how much you had changed that advice, or if you had changed that advice in view of the recent surge in the price of gold.
Well, yeah, I've had that advice for, well, I'm not giving advice over the airs, but I've had that belief for the last, I don't know, since how long you ever been listening to me. You know, I like it as a percentage. That being said, gold is very high right now. So as I'm not a gold bug because I like, you know, Bitcoin, I like stocks, I like real estate, like insurance, I like, you know, fixed assets. It's a part of a diversified portfolio. And I will tell you, there's something that gold ETFs are a great way to get gold exposure and low expenses. I'm looking at one gold ETF right now. The expenses are 0.25%. You cannot get that if you call the gold radio bugs. Now, I get people say, well, I want the physical gold. There's an ETF that you can take physical possession of the gold if you wanted to. So I like that. That's what I'm a big fan of. But so you got to watch it if you're buying and selling it. But yeah, I generally am an asset allocator, meaning I like to have a certain percentage in gold, a certain percentage in annuities, a certain percentage in stocks, a certain percentage in real estate. And when I say annuities, I mean low fee ones, not high fee ones, and ones that go to your heirs when you die, not ones that don't. But the show is called The Financial Quarterback. You can't win the Super Bowl with just a running back. So different players on the field are likened to different financial things in one's portfolio. And precious metals is a critical component. Certainly. You know, any other follow-ups to that? And then we got Ron, who's a question on annuities.
It seems to me, for my my knowledge of investing has grown exponentially due to listening to you Saturday mornings. But it seems to me that Bitcoin, that gold is a very hard asset, and Bitcoin is almost the softest asset you can buy. And I guess that I am afraid that if I had significant Bitcoin assets, that someday a quantum computer or a team of quantum computers would hack into a lot of Bitcoin accounts, including mine, and steal all my money invested in that. Do you think that's a possibility?
I mean, it's a possibility, but those same quantum computing power that would be attacking the network. By the way, people attack the Bitcoin network today. Every day they try. But you don't hear of stories because the miners defend. Bitcoin has something called miners, and they basically are solving a math problem. Computer chips are solving a computational problem, and every time it solves it, it makes the network stronger. So you would have that same computing power that's working against the Bitcoin network would be now defending it. Does that make sense? So you don't think if you're a Bitcoin billionaire, you don't think you would be investing in the quantum computing power? Does that make sense?
Yes, that's true. Yeah.
I mean, there are a lot of different what's called FUD that's spread on. FUD stands for fear, uncertainty, and doubt. For years, people said, oh, the government's going to ban Bitcoin. Didn't do it. Now government's embracing Bitcoin. People say, oh, well, they'll confiscate it. Hasn't. Oh, what about China? China didn't. So what about the FTX scandal? That was a great buying opportunity. And so I think Bitcoin is, in a lot of ways, the digital gold of people. But anyway, I don't want to get into a bit. We'll do a Bitcoin show soon enough. But generally, I think Bitcoin's here to stay. I think gold's here to stay, right? For the exact same reasons. People don't like the idea that you can't touch, taste, or hold Bitcoin in your hands. They like that about gold, right? They like that gold has been around for, I don't know, thousands of years. So next up we have any other follow-ups on that, Gordon, before we go to Ron?
No, that's all for today. Thank you very much, Josh.
Wonderful. Okay, we're going to go to the calls. Next we have Ron, and we'll be with you all next hour, taking your calls at 800-321-0710. Go ahead, Ron.
Hi, Josh. Ron calling from Connecticut. I have an account, I don't know if I can mention this, with Ameriprise, but I said it.
Yeah, I don't like to mention companies on the air.
I'm sorry.
Because then if I say, oh, that company sounds great, I'm promoting them, and they may be doing something I don't agree with. If they're doing something bad, then I'm bad-mouthing. It doesn't really bode well from a compliance standpoint. So go ahead.
Okay. Well, in general, why are a lot of fiduciaries, financial advisors, reluctant to recommend annuities?
Because I would say they are fake fiduciaries. They are not looking. I mean, that's an easy answer. But here's the thing. Is an annuity, when you hire a fiduciary comes from the Latin fide, meaning the advisor you pick is acting in your best interest. The reason why fiduciaries generally don't like annuities is because what is a comparable investment to an annuity? Bonds, right, or CDs, fixed income. If I put a fee on an annuity that already pays a commission, generally people frown on that. So generally a fiduciary would not charge a fee on an annuity, so they would not get a recurring revenue for themselves. So let's say you have an advisor, and the advisor manages, $500 million, okay? 1%, let's say the advisor averages 1% on that 500 million. So they're making $5 million in gross revenue a year, okay? But 50% of their portfolios have bonds, 50% in stock. If the 50% that is in bonds gets moved to annuities, that advisor might make a commission in the first year from selling the annuity, but they're going to lose the recurring revenue for as long as that relationship is upheld. And typically, when you hire an advisor, you keep that advisor for at least, studies show, 10 to 14 years before you change advisors. It's a typical thing. People kind of change advisors about once every 14 years. Whatever reason, death, marital change, maybe you just lose connection. Does that make sense? So they're losing their recurring revenue. Now, they might say, oh, it's because annuities have high fees, but they're low-fee annuities. Does that make sense? They're annuities that do what a bond does better than a bond. That's why I like some. Meaning, name a bond that you know of right now that is A-plus credit quality that gives you a 5.5% yield or 5% yield for 5 years. You can't with bonds, but you can with an annuity. So, as Tom Hegna says, an annuity gives you A-plus rated companies with a B-plus or B-minus yield. So you get higher yields in a safer environment. Now, there's a risk with the good annuities that you generally have to hold it for a period of time, 5 years, 7 years, 10 years. But there are liquidity provisions. You can get 10% out without fee. So there are a lot of good options for you. If you're looking into annuities, make sure you don't get taken. There are good ones and bad ones. Call us at 888-988-JOSH. We're there for you. But don't throw out the baby with the bathwater. And a lot of people do that. They throw out the baby with the bathwater when it comes to an annuity. So give us a call, 800-321-0710. If you have questions on stocks, bonds, annuities. The other reason they what is the good reason to not recommend an annuity? Well, if you are a growth-minded person who is okay with the risk of the stock market, what is a reason to do an annuity? If you want, some annuities have zero internal fees, and let's say you're fee conscious. You don't want to pay a fee every year, but you want income for life, or you want guarantees subject to the claims paying ability of the underlying insurance company. So you want to get 5% a year for 5 years without worrying about it. You want to get potential for gains subject to a cap. There are annuities that are linked to the S&P, where if the S&P goes up 10%, you make 8. If it goes up 20, you make 10. There are a lot of them out there. So you want to be careful of them, but you don't want to throw the baby out with the bathwater. I don't think a real fiduciary would just dismiss it. 888-988-JOSH. We'll be back after this.
WAR and WAXQ HD2 New York, the #1 preset on your car radio and on the free new and improved iHeartRadio app. Free. Never sounded so good.
New York has a voice.
In times like these, there's no one better.
To and from work, nothing but 710 for me.
Always the voice of New York. 710 WOR.
An iHeart radio station.
It's 62 degrees at 10 o'clock. Good morning. I'm Bill Trefiro. Rain and wind in the forecast this weekend, and that's a mixed bag for those who are battling the wildfire in Ocean County, New Jersey. Andrew Whitman has more.
The Friday night update from New Jersey Forest Fire Service put the Jones Road wildfire, as it's being called, at 60% contained, with 15,300 acres now up in smoke. That smoke has been thick in nearby Lacey and Ocean townships. Officials say the rain predicted Saturday morning won't be enough to help, and the thunderstorms projected for Saturday night could reignite the fire. And wind gusts predicted for Sunday morning won't help either.
A man who was dragged by his own car when he tried to stop someone from stealing it in the Bronx has now lost his leg. The 32-year-old baggage handler at JFK Airport stopped on Wilkinson Avenue in Pelham Bay after his shift around noon on Thursday. As he left his car running while double parked to get some food, the thief jumped into the driver's seat and took off. The victim grabbed the door and held on for about a block and a half until police say the thief intentionally sideswiped a car. The victim is still critical with head trauma and now missing a leg. The car thief is still at large. Former Congressman George Santos has been given a 7-year prison sentence. The New York Republican, known for fabricating his resume, was sentenced Friday in a New York courtroom. Santos pleaded guilty to wire fraud and aggravated identity theft and admitted that he stole from campaign donors and lied about it to Congress. Earlier, he told reporters that he was totally resigned to receiving the maximum prison sentence. Pope Francis has been laid to rest. After the funeral at St. Peter's Square in Vatican City, the procession traveled to Rome's Basilica of St. Mary Major, and crowds of upwards of 300,000 lined the route. He's the first pope in over a century to be buried outside the Vatican. In sports, hockey action, the Devils are double overtime winners over the Hurricanes 3-2. Baseball, the Mets lost to the Nationals 4-5. The Yankees fell to the Blue Jays 2-4. Playoff basketball, tomorrow the Knicks take on the Pistons in Game 4. The Knicks leading that series 2-1.
Here is your WOR Weather Channel forecast. It's a mild day again today, but the rain is probably limiting your time outside. Rain off and on much of the day. You might hear some thunder as well. Temperatures today, 72. And a few showers around this evening, but we're dry late tonight. Tomorrow, a dry day, partly cloudy, breezy. It's cooler, a little dose of springtime. 60 the high. Then Monday warms right back up. Sunny and 70 Monday.
Next News 11, bulletins at once. Wake up with Menti in the morning, 6 to 10 a.m. on Monday. I'm Bill Trefiro on 710 WOR.
Tired of losing money in the stock market roller coaster? Frustrated with the government taxing you into oblivion? Worried about inflation? How do you prepare for so many financial uncertainties? Welcome to the show that will help you develop your game plan. The Financial Quarterback with Josh Jelinski. Josh is a noted financial advisor and president of the Jelinski Advisory Group, and he's here to answer your questions. Call into the show at 800-321-0710. 800-321-0710. Now, let's kick off your financial future. Here's Josh Jelinski.
We're back. This is Josh Jelinski, the Financial Quarterback. If you have questions, call us now. 800-321-0710. If you have questions on stocks, bonds, annuities, mutual funds, give me a call right now. 800-321-0710. 800-321-0710. If you have questions on stocks, bonds, annuities, mutual funds, whatever it be, no question is a dumb one, except the one that you do not ask. So we're here for you. We love talking to you. This is an open line edition of the broadcast. So, are you worried about the stock market? Well, we're here to talk you through it and to talk you off a ledge. So, now this is interesting. April 25th, Bank of America's HeartNet warns to sell the rebound in the U.S. and the dollar. Well, he could be way wrong. He could be right. We'll see. You know, this is the thing. You do not want, you're going to see this. I get these articles. I got a Jim Rickards book that said I should buy this, that said we are going under, the market is crashing. Josh, what do I do? And my point is, get a life. No, enjoy. You know, we should get a motto for this company. Get a life. What I mean by that is enjoy your life. Build your portfolio in such a way that you don't have to worry about the day-to-day swings. Meaning, you have so much in equities. If the market really unnerves you, maybe you only have 20% in equities or 30% in equities. Maybe you don't have 100%. So there are products and strategies that you can do that are hedged against a stock market decline. Now, you're going to make less when the market's up, but you don't care. You're trying to build a portfolio that you can live with and enjoy that trip with your kids and grandkids. Does that make sense? This is about enjoying life. Next up, we got Bob. Go ahead, Bob.
Good morning, Josh. A quick question. My daughter, 8 years ago, when she first got out of school, worked for a small company. Unbeknownst to her, they had a 401 retirement plan. She never signed up for it, never contributed. She got something in the mail from the office manager who still works there that shows she has funds in this retirement plan. It's from a insurance company, and it's a target date fund. An insurance company with a target date fund. Is it possible for her to transfer this money to her existing 401k with a different financial institution?
Josh, you there?
Old 401k with a previous company. Is that correct?
Correct.
So she could move that. I would generally advise to go from 401k to IRA, so she has freedom of investing choices. But there is a 401k disclosure that basically we go through with clients outlining what are the fees upon the switch. Maybe the new 401k has greater fees than the old. Maybe the IRA has greater fees than the old. What are the risks? But generally, I like having an IRA that she would control the investments. You could do that with us and call us at 888-988-JOSH. We could open up a Fidelity IRA for her, a Schwab IRA, Interactive Brokers IRA. Just make sure you're aware of the various options. Now, one of those options is she can leave it where it is. Another option is she could roll it to her new 401k. The third is she could have an IRA, but we can certainly help her with that for free. Okay? I mean, we do a free review. We charge for our services.
Yeah, no, I was just concerned that this is held by an insurance company and a certified investment trust, and I figured it would be difficult to take it from an insurance company.
No, it's not.
To,
no, not at all. The CIT, by the way, might be a very the CITs are. I thought it's a collective trust, is what the C stands for. I don't know about certified, but no, it's just like any other 401k. You can move it. Provided she knows the risks and all that. So yeah, I would definitely move it so she can monitor it, right?
Yes. Okay, great. Thank you, Josh. Appreciate it.
And many of you, for some reason, leave your old 401k with old employers. It makes no sense. Why do you want to have to deal with your old employer? It's like, maybe it didn't go well there, right? So there is something called auto enrollment, which appeared to have happened to her, that basically you are kind of forced to enroll in the 401k. We might be doing that, Jim. Yes, no, I'm kidding. So no, but the idea is that you, the investor, are, if you're given a benefit, you're going to spend the money. So most employees, right, they would rather have the money now than later. But the idea of a 401k is, yes, we know that, but the idea is to have a forced savings account. So the government allowed companies to force auto enroll, which principally I don't agree with, right? Like, Jim, I'm going to take 3% of your pay and mandate that it goes in. Like it's a forced thing. I don't fundamentally agree with it. But the idea is that Big Brother knows best. So they created this availability. But hey, she might have money she never would have had otherwise. So it's probably where the world is going. 401k auto enrollment is a thing. So it's just the idea is that employees, the big thing when you own a company is you want your employees to adopt the 401k. Why? You love your employees, right? But what if they get disabled and need some emergency money? If they can't perform their job and they don't have disability insurance and they go out, like, how are they going to live? So the 401k provides an emergency fund in a lot of ways. Now, it's ideally designed for retirement, but a lot of companies have struggled with, how do I get my employees to adopt this concept and put more money in? Well, we help you. And the truth of the matter is people are feeling the effects of inflation. So you need to educate your employees. We provide free employee education sessions to those companies that hire us to manage their 401ks. Do you know now, like, these companies are charging per visit? If you want, Nationwide or Voya or this or that company to come out, they charge you $500 a visit. We do it for free, okay? I mean, we get paid a management fee for doing the 401k, but we will help you with that. Also, one thing we help is disability insurance. If you get more than 2 people in your company, there are certain to sign up for disability insurance. Some companies will give you a discount. So next up we have Andrew. Go ahead, Andrew.
Hi, Josh. I was calling because, as a guy who wants to make a quick buck and, very conscious of business acumen, I wanted to ask you, first, how do you feel of casino stocks? And also, when it comes to anything for a mutual fund, are there any guidelines that you would recommend in this current environment?
Well, I can't recommend you buying particular stocks. I mean, casino stocks have been a source of great wealth for many people. Morally, I'm kind of torn. I don't really like those stocks, but in terms of long-term ways to make money, I mean, what's Wynn right now? Wynn stock, let's look at it. It's $82 a share. P of 18, dividend yield of 1.22. You have Caesars, you have MGM, Las Vegas Sands. It's interesting. Over the last 5 years, they haven't done a whole lot of nothing. When over the last 5 years, Las Vegas Sands, that could actually be a value because the problem is they do these initial offerings, right? So a lot of them spun out their China developments, which were earning a lot. So it's interesting. 5 years ago, Wynn was $76 a share. Today, it's 82. Not a huge growth rate, but you can certainly invest in them. I am not recommending you buy or sell casino stocks. In terms of funds, what specific do you mean? Like, what are the characteristics when looking for a fund? What do you mean by your question?
Well, I mean, as a guy who wants to open his own company and use his family name, having the backing of many relatives, should we say, who or what field or what do you think would be? I mean, I've taken a look at shipping and receiving, but what do you think is a profitable venture these days for someone again who would like profit very much,
Okay, do you mean a personal business that you want to own or stocks that you want to own or funds?
A personal business that I want to own.
Okay, because I thought one of your questions was about what characteristics in mutual funds. Am I right there or no?
Right.
Okay.
Tell me that.
Well, the businesses, you got to buy a business with customers, right? I mean, people want to pay you. I mean, cybersecurity is an ever-growing field. Compliance is an ever-growing field. Those are two things that, as government regulations increase, we've not seen as significant. Those are fields that People always need help. AI is growing. But then, I've had clients, they do well in hotels. They do well in car washes. They do well on, being doctors, lawyers, accountants. You got to find something where you can acquire customers in a repeatable fashion and serve those customers, love those customers. We love our clients like family. That's why kind of our model is all heart. We don't just play the game like everybody else at the Financial Quarterback. We work really hard. I mean, we're educating right now on a Saturday morning. So as far as the characteristics in mutual funds, you want to diversify not just stocks, but also asset classes. You want to have some small caps, some mid caps, some large caps, some international. You want to have some international exposure, maybe some gold exposure. You want to have S&P exposure. You want to be diversified across different asset classes and different trading styles. You want to look at strategic investing. You want to look at tactical investing. And you want to generally buy things that don't pay a commission. This is when you're buying a stock or an ETF, but you're paying an advisor a fee for fiduciary services. So I hope that helps you, and I'd love to meet with you and give you our legendary retirement game plan. That is 45 minutes with our team, 888-988-JOSH, and you may even get to meet with me and meet with a lot of the people, and they're surprised. Oh, I love meeting with the clients. 888-988-JOSH. We have a great team. We have CFPs on our staff. We have CFAs. We have CPA. We're there to help be your one-stop shop for retirement planning. So call us, 888-988-JOSH. And next up, we have Mark. We'll be back, though, after these messages.
Maybe it seems like prices can't get much higher, or that the stock market is headed for bear territory, or maybe you're worried about another great recession. Josh Jelinski, the Financial Quarterback, can help you protect your family's financial future in times like these. Call 888-988-5674 to take advantage of Josh's 27-point plan to achieve financial health. And when you call, you'll receive a free copy of Josh's book, Retirement Reality Check. Call 888-988-5674 to receive your free copy of Retirement Reality Check. Josh and his team at the Jelinski Advisory Group can help you lower your taxes and lower your risk in these uncertain times with a 27-point checklist designed to improve your financial health. Whether you're worried about runaway prices, fear of an upcoming recession, or a stock market meltdown, tune in to the Financial Quarterback and count on Josh Jelinski to call the play. For a free copy of Josh's book, The Retirement Reality Check, call 888-988-5674. That's 888-988-5674. Or visit Jelinski.org. That's JALINSKI.org.
We're back. We're with Mark. Go ahead, Mark.
Yes, hi. I would like to know how you, and both you and your audience, feel about Trump's tariff initiative. From what I understand, in the White House, there's two opposing views amongst his staff, whether to go all at once, the shock and awe type, or several countries at a time in succession, starting, let's say, with Canada and Mexico and so on. And I have my opinion that I liked what he did because it isolated China psychologically, and then you can always backpedal. And then if you ask your audience, your opinion also, as you ask your audience, it'd be fun to ask as if you're in a pub or a cafe or a bar, like where's the person coming from, their personal background, and how much they pay attention, or things like that. And I can vouch for what you said to your last caller about personal attention. Personally, and I want to ask, do you still do your annual 4
current clients, you had a music fest you used to have. I never went.
Yes.
I didn't have the chance.
Yeah, you should go. I know you, Mark. I remember your voice very well.
Thanks.
Yeah, you should come. Yes, we still do our annual big Christmas party where Jim dances on top of the piano. Right, Jim?
Oh, yeah, I can't wait this year.
No, he really doesn't. But we had a great band. Last year's.
Brian Kirk.
Did you like them, Jim?
Oh, I love them.
We have Brian Kirk and the Jerks, where if you go see them, I think they charge big ticket prices. I mean, they're an amazing band, and we get but you got to be a client. It's a client only event. It's not a. We love you if you're not a client, but we want our clients to know they're extra special to us. So if you want to learn more about how you can become a client, call us at 888-988-JOSH. The pub conversation could go awry because what's happened with the tariffs, right? It's become politically charged. There was a time, right, where Bernie Sanders wanted tariffs, where the left wanted tariffs. Now the right wants tariffs, and there was an interesting stat by Jared Dillian on his Twitter feed, X feed. And one of the most shocking, but it's not really that shocking, is both Democrats, Republicans, and independents were generally the same on the idea of tariffs, had the same approval rate versus free trade. Now, if you identify as a Democrat, you don't like tariffs, even though that's a traditionally conservative idea, if you're a free trader. I am a free trader. I don't like any tariffs. So I would be opposed to countries tariffing us. Now, I might use a tariff as a threat for a country to engage in free trade. But I think the honest truth is this is an experiment. So I don't know how I don't know. What do you think, Jim? The pub? But nobody knows. I think it's something where the market voted, and the Trump tariffs, I think they were popular at first. He was elected. And then due to the volatility in the market, people got scared and don't like them as much. But, yeah, I'd love to hear people's, I guess, opinions. Do you like the tariffs? Do you not? I do not think it is valid to say the tariffs are there to... There is a general anxiety among people to say, oh, these countries, they're taking us to the cleaners. We're going to tariff them. But as you see, they're fighting back. And I appreciate the idea behind the tariff. I just think our economy is so global that you have to exclude, smartphone parts, because if people's smartphones start going up, that's going to affect them. I mean, I go back and forth personally. So you like the tariffs? I guess I'd be kind of against them, but I'd be of the camp that would be against them. But we'll see. We'll see how it works, right? They obviously, it's funny, the first Trump tariffs were bad-mouthed, and then Biden kept a lot of them. People forget that. So they were bringing in revenue. Trump says the China tariffs will drop substantially, but it won't be zero. I would love the idea of having a free trade zone with everyone but China until China drops their human rights abuses. That would be, but that we're not talking about that. That's the interesting thing. But again, there needs to be some de-escalation in the trade war, because people don't want to spend a certain amount for TV or things like that. But we'll see. Any other comments on that, Mark?
No, I think you answered that quite well. Thank you very much.
But I think a lot of people will answer politically. So if you like Trump, you will say, I support them. But there's a lot of people like Trump who are against tariffs. Like you said, there's two camps. But I honestly think we have not had this level of tariff increase in 100 years. And 100 years ago was a completely different economy. We didn't need all of these countries as much as we do today. I think there is a broader point that we make so many things overseas, as COVID showed us, that we are at risk as a country if all of our manufacturing is overseas. And so if the tariffs solve that problem with computer chips and car parts, one of the reasons we had massive inflation during COVID is we couldn't get certain things, right? Russia-Ukraine war, food manufacturing. We need to have food fields for cows, for grains, not for Beyond Burgers, right? And all that crap that, but we need milk cows, we need dairy cows, we need steak, we need grains, we need, fruits and veggies. So we need a lot of stuff here. So there is a good that might come out of this, but we shall see. But I would be for them if I knew that we would have no income tax, right? Like if I knew, I don't trust that though, because we had them the first term, and our income taxes only went down very slightly. But if we said no income tax, we're going to tariff goods. And I don't think 145% tariff sustainable. But let's call it a 10% tariff or 20% tariff. And that allowed everybody to get tax relief. I'd be for that. But what I'm worried about is we have tax rates stay the same. And then we have tariffs due, so goods cost more. So to me, there wasn't enough thought of the rollout. Does that make sense? Meaning you're getting this amount of pain for this amount of pleasure. Meaning they talked about, we'll get a $5,000 refund. I don't want a refund. I want structural lower taxes in exchange for a tariff. Because I don't really agree with tariffs or like them. So I have to get some deal. So we shall see. But as Mark says, we could take a poll of the audience. If you want to call us at 800-321-0710, give us your opinion of the tariffs. But being respectful of those who disagree on both sides. I don't know. And I think that's the problem, is we don't know who's right. Is Elon Musk right? Tariffs are bad? Or is Peter Navarro right? I think Elon Musk, I'd rather, pick him in a fight. But we'll see. Next up, we have Rich. Go ahead, Rich. You are considering a trust.
I enjoy your program. I listen every week.
Thank you so much.
I want your thoughts on trust accounts. Currently, I'm in the 24% tax bracket, and I was very much interested in opening up a couple of trust accounts for my kids. And then I looked into it and found out that the tax rate in trust accounts is 36%, I believe, and it kind of turned me off. I never anticipated the tax rate being that high. So I don't know what your thoughts are regarding, my current tax situation versus trust account, higher tax rate, and is that like a trade-off to open a trust account? You pay a higher tax rate, or what are your thoughts there?
Well, I don't know if you're getting the right information. There are simple trusts. There's simple trust taxation where it's passed through to your tax rate. And there are complex trusts where you have that higher tax rate schedule. So you would want an attorney. We're not giving tax or legal advice, but we could refer you to the attorneys that we use on estate planning, and they set up what are called disregarded entities, where it flows through to your tax return. So I hope that helps you.
Yes, it does. Thank you very much.
So part of our financial quarterback conversation is many of you go to an attorney, go to an advisor, and you get different conflicting advice. Part of the financial quarterback is we will meet with your attorneys, accountants, advisors to make sure the plan is working for you, Rich. And what typically you go hear a talk on a trust, it sounds good, then you Google something. And you get the Google slap. And somebody says, oh, you don't want to do that because of trust. And that happens with annuities. That happens with trust. That happens with this and that. Don't be subject to the Google slap. Get educated. Because there's a reason Google is a business. It's one of the most profitable businesses in the world. Why? It's not an objective search. I think some of you are still brought up in the era of the card catalog. Remember that? If you had a question, you would look it up in the... Did you remember this? Am I dating myself? In the library? You didn't go to the library, Jim. You were too busy rocking out.
Yeah. No, I remember.
Oh, you remember that. Okay. You were, and you look up the topic in the card catalog, and it would just be a catalog of books you could read on a particular subject. We think Google is like that, not realizing that people pay for search results, and even ones that aren't paid spend billions each year on optimizing the search engine results for profit. So Google is not a non-for-profit entity. So, and the same things with these AI searches. So what I would do is look, I'd call us at 888-988-JOSH, and we will get all these people together and get you a trust if that's what you want. That is a little bit more tax efficient than what you're hearing about. Okay? And we don't do trusts, but we act as the financial quarterback in your life, making sure all the players are working for you. It's my trademark process. Are all the players on the team working for you with all heart and no regret? Like I'm like the Dan Campbell of personal finance. I'll talk about that later. This is Josh Jelinski, the financial quarterback.
Josh and his team at the Jelinski Advisory Group can help you lower your taxes and lower your risk in these uncertain times with a 27-point checklist designed to improve your financial health. Whether you're worried about runaway prices, fear of an upcoming recession, or a stock market meltdown, tune in to the financial quarterback and count on Josh Jelinski to call the play. For a free copy of Josh's book, The Retirement Reality Check, call 888-988-5674. That's 888-988-5674. Or visit Jelinski.org. That's JALINSKI.org. Maybe it seems like prices can't get much higher, or that the stock market is headed for bear territory, or maybe you're worried about another great recession. Josh Jelinski, the financial quarterback, can help you protect your family's financial future in times like these. Call 888-988-5674 to take advantage of Josh's 27-point plan to achieve financial health. And when you call, you'll receive a free copy of Josh's book, Retirement Reality Check. Call 888-988-5674 to receive your free copy of Retirement Reality Check.
Okay. So I'm going to talk about what me and Dan Campbell have in common. Grit, determination, and biting the kneecaps off of our opponents for you and your financial success. I'll talk about what I mean by that. We want to have growth fueled by grit. We're going to play this much talked about if you're a football fan. Now, if you're not a football fan, just picture a losing team going 0-16, the worst team in NFL history, the Detroit Lions. And you played for them years ago. And now you're coming back to coach them. And you're not just coaching them, you're coaching a whole mentality of a losing team to a winning team. And you might feel you're losing the game of financial wealth. We want to help you get that winning mentality. Call us at 888-988-JOSH. And maybe you're successful, by the way. A lot of our people come to us from other advisors. They feel successful. They know they have enough money to be okay, but they don't feel it because they don't have the proper plan. Does that make sense? They're worried. Remember, Jim, when he first started working with us, I don't know if you remember this. He was amazed that people who had so much money were worrywarts about their money. And one of the things that we do at the Financial Quarterback is to help you sleep at night. Meaning it is math, but it's more than math. It's your heart. Jesus says, where your treasure is, there your heart will be also. We're not talking about idolizing your wealth, but your wealth revealing what you love, what you care about. So money is both revelatory of idols of your heart, and you want money to be you want to be a steward over your wealth. You don't want money to rule you. And you do that by having a plan. And when you're watching CNBC, hey, we've all been there. Looking at the phone, your stomach turning as you see the market going down another day. If that has been you over the last few weeks, call us. There are answers where you don't have to worry every day about your money. 888-988-JOSH, I'll give you the free book. But I want to get that quote. New Lions head coach Dan Campbell, we're going to bite a kneecap off. So we're going to play that quote. I love the quote, and I'm going to connect it to finance a little bit for you. We're going to the phone lines at 800-321-0710, 800-321-0710, and we have the NFL draft. And there are a lot of parallels to the NFL draft in your money. What players on your team are you drafting? See, you may have a great investment advisor, but they are not looking at the whole picture. You may have a great insurance person, but they are not giving you the whole picture. And it's not necessarily their fault. It's that we are trained to be one-dimensional thinkers in a three-dimensional world. Other people are playing checkers with your money. We're playing chess, three-dimensional chess. So what do I mean by that? When you have a financial game plan, our legendary retirement game plan, it sets you up for success, not guaranteeing success, but how I define success is being okay in a variety of circumstances. And a good financial plan means never having to be poor again. It doesn't mean you get the absolute highest rate of return. It means you can sleep well at night knowing that you're not subject to the day-to-day volatilities of silver and gold or Bitcoin or the Standard & Poor's 500 index. You have a blend of strategies working together as a concerto for you, not a cacophony, but a symphony. So call us, 800-321-0710. Is Tom getting that clip up? I found the clip. We're going to bite a kneecap off. And then we'll play that clip, I guess, whenever maybe Tom's taking a nap. Okay. He said send it to me. Tom's great. He couldn't do what we do without Tom and Jim. So, and Jim is going on a missions trip, so don't call him late at night. He'll be in Romania serving the children. What do you go to Romania for? Are you feeding the children,
No.
Jim? What do you do when you're in Romania?
Church building.
And it's a wonderful time. It's a highlight of his year. And we're glad he goes as a missionary for so many days, and hopefully and he comes back refreshed and supercharged. And what do you like about going to Romania the best? Because you go every year pretty much.
Here, this will be my 20th.
What do you love about Romania?
I don't know. I mean, it's just definitely a calling from God. It's the people are just wonderful. I love the people there. They love us back. So.
Do you look Romanian?
Why?
Yeah. So Romania, if you don't know, was a war-torn country ravaged by communism. And it's funny, interesting, you go to Romania. I had a woman who would go to the orphanages, good friend of mine, Tiffany, growing up in church. In her college years, she devoted her life to going in the orphanages. The orphanages were so bad, she just had to hold the babies because they would develop all of these problems, I guess, if they weren't loved by the communist government. Like, what was that about?
The government couldn't handle all the orphanages, and
Because nobody wanted to have kids in a communist country, pretty much. So they gave up their kids.
I stayed at an orphanage for many, many years, but it was a Christian orphanage that had about 12 kids in it.
So, yeah, well, thank you so much for what you do for us and the clients. Next up, we have the one, the only Dr. Anthony. Go ahead, Dr. Anthony. Dr. Anthony.
It's so nice to hear your voice on the radio in the morning.
Well, it's nice to hear your voice on the radio.
Thank you. My wife, Melissa, is Romanian, and she was smiling when she heard Jim say that he's going to go to the orphanages and hold the babies and such.
Yeah, Jim's an amazing guy.
He certainly is, without a doubt. You have a good team. Jim, Howard, and the whole bunch. You really developed a very good team.
Thank you. And we've known you for, I don't know, 15 years? It's been...
Oh, the first time I met you was in Manhattan, and we had a long face-to-face interview, and you kept saying, I'm not rushing you. I want to take my time. I want to give you a whole profile of what's going on with all your finances, and you put everything on the big board, and it woke my eyes up, let me tell you.
Yeah, well, thank you for that. Now, you had a comment on calming investors.
Yeah, I don't think you get the credit you really deserve in the advice, and I'm going to call it comfort advice, that you give your audience. Today, for example, you put a lot of people's feelings at rest when you said the market is the market. The market goes down, the market will go up. And I know on my account, I don't even want to look at it. I don't want to call Jim and ask what my account is worth because I know it dropped tremendously. But knowing that you're there managing it and that you're there as my comfort blanket, I'm not worried. I know it's going to go up.
Yeah, and you're an aggressive investor, so you can't get the guts without the glory. You know, people wanted the growth of the AI and the Mag 7 boom. You've gotten that the last 10 years, But people have to realize you don't get the guts. You don't get the glory without the guts when it comes to the market. And that's why, as a part of a plan, an overall plan, you don't have all your money in the stock market. You have annuities, you have the TDA, you have the, the this, the that, the cash flow insurance. You have, not meaning you, I mean just everybody has should have things that complement one another. So as you're looking at a portfolio, to have 100% of your money in the stock market is probably a mistake, right? But if you believe in America, when you buy stocks, you're not betting on tomorrow or next week or next month. You're betting on 5 years from now, 10 years from now. Do you believe your account will go up? Yes. Do you believe America is still the beacon of hope? Yes. Now, I get some people say, well, I'm worried about the future with America. People were worried last year. People were worried this year. People are worried. If you don't like Trump, you're worried now. If you didn't like Biden, you were worried a year ago. But the point is, the market goes up. If you look at 1926, right? The stock market growth since 1926 was something akin to 10% a year. That means you double your money every 7 to 10 years. But that doesn't happen without the volatility. Just think even the last 5 years, we had COVID. We had the inflation is transitory debacle with the Fed. And now we have the tariff tantrum. And then before that, we had the first tariff tantrum. So I think we will look at this and, you know, look at this as a blip 5 years from now. Maybe I'm wrong. And there are people who say, oh, now's the time. We're going into a Great Depression. Why, though? You got to look at what is their agenda. Their agenda is to sell you a book, typically, or a newsletter subscription service. But then, you know, it's funny. I subscribe to them just to see, like, what people get. And they always tell you what they got right. Their calls that they got right. They never tell you that they got wrong, right? Because they want you to believe there's something special. So stocks are for long-term money. Bonds, cash value insurance, annuities are for more intermediate-term money. Short-term money, cash. A good financial plan will have a little bit of everything. Or as some people say, a third for protection, a third for growth, and a third for savings. Any other comments on that before we go to the break?
In addition, whether you realize it or not, you said enjoy life. Enjoy life. It's not all about saving money. And you know what? Melissa and I, we already arranged in May to go to Memphis, Tennessee. We're going to stay at the King's house, his property, Graceland, and we're going to enjoy life. And that's what it's all about, enjoying life.
Exactly. That's the biggest thing. And if you can't sleep well at night with the amount that, not you, Dr. Anthony, you general who are listening, if people can't sleep well at night with the amount they have in the stock market, they should consider rebalancing. So if you have 80% of the stock market, maybe try putting 70%. If you have 70, maybe put in 60. But people call, sell everything, sell it all now. You don't want to do that, You want to have a blended portfolio. Now, I do have some clients, by the way, they have 0% in the stock market. Zero. Because they cannot take the volatility mentally. If that's you, we have solutions for you too. So call us 888-988-JOSH. We're there for you. Thank you so much, Dr. Anthony. Enjoy Graceland. I want to go. I love Elvis. Great, the king. You kind of look like him, Dr. Anthony. So exciting. So we're going to go for a break. Thank you so much for the call. We'll be back after these messages.
Maybe it seems like prices can't get much higher, or that the stock market is headed for bear territory, or maybe you're worried about another great recession. Josh Jelinski, the financial quarterback, can help you protect your family's financial future in times like these. Call 888-988-5674 to take advantage of Josh's 27-point plan to achieve financial health. And when you call, you'll receive a free copy of Josh's book, Retirement Reality Check. Call 888-988-5674 to receive your free copy of Retirement Reality Check. Josh and his team at the Jelinski Advisory Group can help you lower your taxes and lower your risk in these uncertain times with a 27-point checklist designed to improve your financial health. Whether you're worried about runaway prices, fear of an upcoming recession, or a stock market meltdown, tune in to the Financial Quarterback and count on Josh Jelinski to call the play. For a free copy of Josh's book, The Retirement Reality Check, call 888-988-5674. That's 888-988-5674. Or visit Jelinski.org. That's JALINSKI.org.
We're back. This is Josh Jelinski, the financial quarterback. Okay. The clip, can you edit out? Okay, the clip I was told has curse words, so we can't air it. Can you get one without? Get one with the bleep, Tom. Dan Campbell on grit and determination, biting the kneecaps speech. Let's see. He says this. Do we have the transcript? Okay, maybe I could just read. Okay, come, Tom, maybe get one where they bleep it out. Okay, this was called the statement heard around the world. Here is the opening statement from new Detroit Lions coach Dan Campbell. This was 2021. Hello, everybody. I'm excited to be here beyond belief. What I'm going to have to do is make sure that I contain myself. So you may get a couple things where I'm completely out of the screen because I'm moving. I'll do my best. So he's talking, and then, yeah, we really need to get the speech. So if we don't get it this week, we have try to get it now. Maybe we can get it without the curse word. I don't like the. He says this. So let me go back. Let me start here again. I wanted this job bad because I felt like I knew this community. I played here. Here's what I know, just an overall philosophy. You're going to say, well, what's the team going to be? What it's not going to be. Here's what I know, all right? I know that Detroit is made up of great people. The community is strong. The place has been kicked. It's been battered. It's been bruised. And I can sit up here and give you coach speak all day long. I can give you, hey, we're going to win this many games. None of this matters, and you guys don't want to hear it anyway. You've had enough. Excuse my language. All right, here's what I do know, is that this team is going to take on the identity of the city. This city has been down, and it found a way to get up. It's found a way to overcome adversity. So this team is going to be built on, we're going to kick you in the teeth. And when you punch us back, we're going to smile at you. And when you knock us down, we're going to get up. On the way up, we're going to bite a kneecap off. So we're going to bite a kneecap off on this stock market, all right? And we're going to stand up, and then it's going to take 2 more shots to knock us down. And when we do, we're going to take another hunk out of you. Okay, Jim? Before long, we're going to be the last one standing. That's going to be the mentality. We're going to learn that any loss that we take, we're going to make sure that we feel the full pain of it and not grow numb to it and learn from it and not want to taste it again. We're going to be competitive in every game, and I can't sit up and have a guarantee of how many wins and losses. I just can't do that. I guarantee you this. These guys are going to fight. They're going to scratch and claw. They're going to be something this city's proud of because they're going to take on the identity of this city. So that's kind of my mentality. You know, somebody told me when it comes to financial planning, I can't guarantee you results, but I can guarantee we are going to fight and be an advocate for our clients. Does that make sense? We're going to be there for you at your times of greatest adversity. And that is the type of spirit, whether you are going, you know, occasionally we get these people, you ever see these people, and they have some list of questions off of the internet. And they say, you know, like the 10 questions you should ask your financial advisor. And like one is like, are you a fiduciary? Yeah, of course we are. But how do you distinguish one fiduciary from another? You know how I distinguish it? Grit, determination, fight, willing to bite the kneecap off of the stock market to help you with your legendary retirement game plan. Does that make sense, Jim? That's what we are a part of. We are all heart, grit. We're fueled by a sense of tenacity. Thank you, you know, Dr. Anthony, for showcasing that. Here's the thing. If you want just another boring, you know, financial advisor, go elsewhere. You know, you want somebody with all asset allocation. You know what? You want somebody there to hold your wife's hand at your funeral. You want somebody there to be there for you and your loved ones when you really need it. That's what we're there for. So I love this speech. And when I heard this speech, I was like, oh, man, that's someone. Now, we got to get this speech cleaned up without the expletives, because he does it way better than I do. But the whole idea is growth fueled by grit. You need the determination. But here's the thing. If you have the wrong game plan, you are going to be scared. The wrong game plan is not knowing where your daily checks are coming from. We give you, when you meet with us, met with a great listener friend yesterday for the first time, Howard, or CFA, CFB, CFA. He basically planned this guy's whole life, and he figured out, okay, there was a deficit. Got a decent amount of money, too. So the thing is, it all depends on what you spend. If you spend, $200,000 a year, you're going to need a lot more than if you spend $100,000 a year. If you spend $300,000 a year, you're going to need a lot more than if you spend $50,000 a year. So come in, take us for a test drive, call us at 888-988-JOSH, and I'll send you my book, Retirement Reality Check. When you call us for the ultimate, the legendary retirement game plan, where you want growth fueled by grit, and say a prayer for Jim as he helps Romania. And the church is there and encouraging people in a formerly war-torn place.
The preceding program was sponsored by the Jelensky Advisory Group. Any awards, rankings, or recognition by unaffiliated third parties or publications, including 5-Star Wealth Manager, Advisory of the Year finalist by Senior Market Advisor, and top of the $1 Million Roundtable, are in no way indicative of the advisor's future performance or any individual client's investment success. No award, ranking, or recognition should be construed as a current or past endorsement of Josh Jelensky or